Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video. Earlier, we have been discussing about the rates of tax in relation to many types of SSCs for the assessment year 2020-21 as mentioned in the Finance Act 1999. We have discussed about some of the common rules in relation to computation of income tax liability and where the tax rates are mentioned in general, some of them in the Finance Act, some of them in the Income Tax Act, and most importantly the steps in relation to computation of tax liability after knowing the total income. And we also discussed about the rates applicable to different types of SSCs, including the provisions in relation to surcharge in case of individual HUF, AOP, BOI, and rebate only for resident individuals, cess, health and education cess applicable for all. In the examination you have to write health and education cess, just don't say cess. Cess is a generic word. Which cess is that? That is health and education cess to be calculated at the rate of 4% on income tax plus surcharge if any. And very importantly, the methodology of calculating the tax liability in slab system in case of individuals particularly, and HUF, AOP, BOI, etc. also. The calculation methodology in slab system we have discussed earlier. For a individual below 60 years, this is the method of calculating the base tax. Basic exemption limit being 2,50,000 and income above 2,50,000 but below 5 lakhs is subjected to a tax of 5%. Income above 5 lakhs but below 10 lakhs is subjected to a tax of 20% plus 12,500, and income exceeding 10 lakhs is taxable at a rate of 30% plus 1,12,500, and this 12,500 and 1,12,500 are representing the tax liability of earlier slabs since the income has already crossed them. Same way, if at all the person is a resident individual with an age of more than 60 years, then the basic exemption limit increases to 3 lakhs rupees. But the calculation methodology is same, 5% of income which is in between 3 lakhs to 5 lakhs, 20% of income exceeding 5 lakhs plus 10,000, 30% of income if it is exceeding 10 lakhs, how much it is exceeding the 10 lakhs by on that 30% plus 1,10,000. That is for senior citizens. Same with super senior citizens also. Up to 5 lakhs no income tax, because basic exemption limit for a super senior citizen of 80 years of age is 5 lakhs. For the income between 5 lakhs to 10 lakhs, the tax rate is 20%. For the income above 10 lakhs, the tax rate is 30% plus 1 lakh. So that is for computation of income tax liability of super senior citizens. Very important to note, this higher basic exemption limit of 3 lakhs and 5 lakhs are applicable only if the individual is a resident. If that individual is a non-resident, the normal rates of tax as we normally apply for any other type of SSC also will be applicable, which means basic exemption limit is only 2,50,000 in that case. Then who is a senior citizen, super senior citizen is a generic word that we should know. 60 and 80 years of age attained at any time during the previous year. One exception is there which is mentioned in the circular of CBDT, which tells, imagine if a person is born on 1st of April, for the purposes of this calculation of 60 years or 80 years, he is deemed to be born on 31st March. So just because he crossed one day, the 60 years completion will not be postponed by 1 year. That 1 day relaxation is given for specific cases who are born on 1st of April. Then we have done some of the exercises, tasks, and I hope all of you have done this task number 2 correctly. And if you have not done that correctly, if there are any mistakes, you should rectify, and most importantly, you should identify where the mistakes are. If you have done correctly, fantastic, well and good, go ahead. So that is the individuals part. Then also we discussed about the tax rates of firms, LLP, local authority and cooperative society. Cooperative society also a kind of slab rate system, but the basic exemption limit is not there. Directly the tax rates start with 10% of the income if the income is below 10,000 rupees. For the income between 10,000 to 20,000, the tax rate is 20% plus 1,000, which is belonging to earlier slab. For the income exceeding 20,000 rupees, the tax rate is 30% plus 3,000 rupees for the slabs belonging earlier. So that is the computation of base tax for cooperative societies. Firms and LLPs and local authorities, all of them 30% flat rate. For domestic companies, 30% flat rate. However, one concessional rate is given for domestic companies whose turnover is less than 400 crores in the previous year 17-18, not in our previous year, but in the previous year 17-18, if the turnover is less than or equal to 400 crores, if the turnover is not exceeding 400 crores, then instead of 30%, there is a concessional rate of 25% that is available for domestic companies. For foreign companies, once again, the turnover in previous year 2017-18 does not matter. Straight away, for foreign companies, the tax rate, base tax rate is 40%. So the point again to note, whenever the turnover in the previous year 17-18 is given, that information is relevant only for domestic companies. Even if that information is given for any other SSC also, we should just ignore it. So taxation is not only about identifying the correct information, identifying the relevant information. Taxation is also, in fact, more about identifying irrelevant information. That is general tendency in the examination problems. Lot of information will be given, but not all of that information is relevant. There will be some irrelevant information also. We should identify what is that. So for any SSC other than domestic company, the turnover in previous year 17-18 is completely irrelevant. And very importantly, the surcharge percentages to be calculated on the income tax, how much they have to be calculated, that we have discussed earlier, and you should remember them. There is nothing to discuss particularly. The only point to remember in surcharge is you have to calculate as a percentage of income tax, not on income. That care you have to take. Other than that, it's all about remembering the rates of surcharge and when they are applicable depending upon the income of the SSC during the previous year. For the individuals, there are different surcharge rates. Up to 50 lakhs there is no surcharge. Between 50 lakhs to 1 crore the surcharge is 10% of income tax. Between 1 to 2 crores of income, the surcharge is 15% of income tax. Between 2 to 5 crores the surcharge rate is 25%. If the income of the SSC is more than 5 crores, then the surcharge rate is 37%. That is for individuals surcharge rates. Any individual will have income falling in any one of these categories only, not possible to fall in multiple categories. What if the SSC is a firm or a local authority or a cooperative society? In all those cases, the surcharge is nil if the income is less than 1 crore. If the income is more than 1 crore, automatically the surcharge is 12%. That's all. Only two things, either 0 or 12%. In case of a domestic company, there is one more, we can say, condition introduced. Up to 1 crore anyway there is no surcharge even in that case, but between 1 to 10 crores the surcharge instead of 12% it is 7%. And when the 12% will be applicable if the total income is above 10 crores, particularly for domestic companies. For foreign companies, if we observe, already the tax rate is high. In fact, the highest of all types of SSCs, 40% for foreign companies. So some solace is given to them, little bit of relaxation given to them in the form of surcharge. They are having the lower surcharge rates of 2% and 5%, depending upon whether the income is exceeding 10 crores or not. If the income is exceeding 10 crores, applicable surcharge rate is 5% of income tax. If the income is between 1 to 10 crores, then the applicable surcharge rate is 2%. For all the other SSCs other than individuals, if the income of the SSC does not cross 1 crore, there is no surcharge. That has to be remembered. Means what? Other than individuals, for all types of SSCs, surcharge is something that is applicable only if income of the SSC exceeds 1 crore rupees. Then only surcharge will be applicable. For individuals, that starts from 50 lakhs only. So this 50 lakhs, 1 crore, 2 crores, 5 crores, 10 crores. These are all different limits which are all set depending upon the type of SSC and the surcharge amounts, and these can be called as threshold limits. Thresholds. For example, for an individual, what is the threshold for not having a surcharge is 50 lakhs rupees. Means once an SSC has crossed the income level of 50 lakhs rupees, he has crossed the threshold, so surcharge is applicable at a rate of 10%. Then what if a person has crossed the threshold of 1 crore, an individual? Then we can say he has crossed the threshold of 1 crore, since his income did not exceed 2 crores, that threshold he did not cross, so the surcharge is 15%. So threshold is nothing but limits up to 50 lakhs. So 50 lakhs is a limit. Between 50 lakhs to 1 crore. So there what he crossed 50 lakhs, what he did not cross 1 crore. Between 1 to 2 crores means which threshold is crossed? 1 crore. Which threshold is not crossed? 2 crores. So like that, threshold is nothing but limit. Limit for what? Only testing whether the income has crossed it. If it has crossed it, then what rate of surcharge is applicable? Only to determine these limits will be useful. These thresholds will be useful. But once we have identified the rate of surcharge, then we should just forget about these limits. Apply that rate of surcharge, whatever the percentage is, on the income tax. That is our base tax, not on the income. That is the key point. Always we have to keep in mind. Never apply surcharge on income. These percentages are not on income. These are all percentages we are talking about. These are all on income tax. And what are these? Only conditions. Exceeding, not exceeding, all those things are only conditions, not useful for any calculation. So those numbers, once the condition is checked, will become irrelevant. And what are those numbers? We can call them as thresholds. And marginal relief is some concept which we will discuss today based on this threshold of surcharges for different types of SSCs. So the point is, for calculating marginal relief, we should know the surcharge percentages and thresholds of all the types of SSCs. So for each case, there can be a question. So look at the cases here. How many cases are there? All of them are different possibilities. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 possibilities are there for different surcharges. 13 different cases can be given for marginal relief also, because each of them has a possibility of having an income in that range, and in that range surcharge is applicable. Wherever surcharge is applicable, automatically there is marginal relief. Of course, out of them, 4 cases we can exclude wherever there is nil surcharge. Means what? Because there is no surcharge, naturally there is no marginal relief also. So if we exclude those 4 from 13, totally 9 cases can be there for marginal relief, which means any one of them can be asked as an MCQ, very important aspect. But it has nothing to do with normal calculation of tax liability. It is a special case. That's what we are going to discuss in this particular session. But before that, let us just check your answers, what you have done in case of different types of SSCs, and hopefully most of you have got correct answers. If not, check where you went wrong. So these are the various cases which were given to you in task number 3. turnover in 2017-18, as I said, is relevant only when the SSE is a domestic company. So when the SSE is a foreign company, this is useless. This information is completely useless. I am just only deleting it at the places where it is irrelevant. Other than domestic company, this information, whether it is there or not there, it doesn't matter. So that is a useless information. He will give it, but we don't care. Partnership also. How does it matter? Doesn't matter. Cooperative society doesn't matter. LLP doesn't matter. LLP doesn't matter. Only for domestic companies, this information relation to turnover in 2017-18 matters. That has to be first of all clearly understood. So though the information is there in the table, our eyes should not even see that. It should be as good as blank column for us, because that information is useless for us. Why should we even look at that? How much is the turnover in 2017-18? We are not bothered about it, except in the case of the SSE being a domestic company. So that is first point. We should identify this information which is irrelevant information. Then total income is of course the income on which we are going to calculate income tax. So we should know the total income, that is the amount on which we are going to calculate base tax. But base tax will depend upon what is the nature of SSE. So first case, domestic company having a turnover of more than 400 crores in 17-18, so the tax rate applicable is 30%. So directly take 30% of the income. And what is the surcharge applicable here? That has to be clearly also identified. So while applying surcharge, which column you should look? Income column or turnover column? Once the tax rate of 25%, 30% is decided, again turnover becomes irrelevant. That is only a condition. Again, what we have to look at? For surcharge calculation or for surcharge percentage application, we should look at income. Income also, is it useful for calculation? No. It is only useful for checking the percentage of surcharge. So what could be the percentage of surcharge for a company with a turnover of more than 10 crores, income of more than 10 crores. So when the income of more than 10 crores is there, automatically the surcharge applicable for a domestic company will be 12% on base tax. So on base tax 12%, cess is what? 4% on base tax plus surcharge. Adding all of them together, the answer here is finally how much? 18 crores 16 lakhs 38,910. That is the answer for first case, P Limited. Same with second case, Q Limited. That is a foreign company. Turnover doesn't matter, but rate of tax here is how much? 40%. For foreign companies, 40% rate of tax. Surcharge, you have to be once again careful. For foreign companies, surcharge applicable is nil, 2 and 5%. So this is what you have to remember. The table you have to remember very clearly. The foreign companies are having, these are the surcharge rates. So nil, 2% and 5%. So here applicable how much? 5%, because the income has exceeded 10 crores. That's it. Again, cess is common. Add all of them. You got answer. That is 18 crores 34 lakhs 12,320. That is the tax liability of the foreign company Q Limited. R Limited, once again domestic company, but with a turnover of less than 400 crores in 17-18, which means the tax rate applicable will be 25% of the income instead of 30% of the income. So take 25% only here for R Limited. Then surcharge applicable is 7%. Why? This income here in 2019-20 did not exceed 10 crores. Income between 1 to 10 crores, the surcharge rate for domestic companies is 7% only. You have to remember that also. Cess is common. After adding all of that, final tax payable is 2 crores 33 lakhs 68,800. That is the final tax payable by R Limited. Then we have S Limited, foreign company. Income is 9 crores 80 lakhs. Foreign company, no need of turnover checking, directly 40%. But surcharge, you have to be careful. What is the percentage here? Since the income did not cross 10 crores, surcharge applicable is only 2%. Cess 4% as usual. After adding it, final answer is 4 crores 15 lakhs 83,360. Then T Limited, domestic company, turnover in 17-18 is more than 400 crores. Means it is available, it is not eligible for 25% concessional tax rate. So the tax rate applicable will be 30% for T Limited on the income whatever it is. Then surcharge applicable will be naturally 12%, cess is 4% after adding everything. 7 crores 47 lakhs 80,160 is the final tax liability of T Limited. The New Limited is a foreign company. Once again, the turnover doesn't matter directly. 40% of the income is the tax liability, base tax of any foreign company, 40% tax rate, flat rate. But look at the surcharge here. What is the income of this foreign company? Only 35 lakhs. When 35 lakhs is the only income, if the income did not exceed 1 crore, no surcharge, so 0. But 4% cess is common. After adding it, final tax liability is 14 lakhs 56,000. 14 lakhs 56,000. Then partnership firms. Partnership firms, we have tax rate of 30% flat, no turnover checking and all, straight away 30%. Surcharge also either 0 or 12%. 12% when if the income exceeds 1 crore. In this case, the income is 2 crore 45 lakhs 23,650. Since income exceeded 1 crore, 12% surcharge is directly applicable. 4% cess is common. Final tax liability will be how much? 85 lakhs 69,540. That is partnership firm. CA Co. income is only 95 lakhs, did not exceed 1 crore. But 30% tax rate to high, it is there. Surcharge is not there since income did not exceed 1 crore. Cess is common. Final tax liability is 29 lakh 76,250. Cooperative society, I have to calculate carefully using the slab rate. So what is the formula or calculation methodology there? Income minus 20,000 into 30% plus 3,000. That is the formula we are talking about here. Observe the formula. Income minus 20,000 into 30% plus 3,000. That is the formula we are talking about. That is the way of calculation for cooperative society. But here there is no surcharge since the income did not exceed 1 crore. Cess is common. Final tax liability is 4,71,590. Next, another LLP is there. LLP straight away 30%, no problem. No surcharge because income did not exceed 1 crore. Cess is common. So 19 lakhs 13,320. Another LLP. Here also 30% flat rate. Surcharge is there since the income exceeded 1 crore. So here the income is 2 crore 31 lakhs 77,380, more than 1 crore. So automatically 12% surcharge is applicable. 4% cess anyway will be applicable in all cases. Final tax liability will be 80 lakhs 99,100. The next one is another domestic company. So this domestic company has turnover of less than 400 crores in 17-18, means it is eligible for a concessional rate of 25% of tax on the income. So 25% of income. Surcharge how much? It will be 12% since the income exceeded 10 crores. Cess is common. Final tax liability is how much here? 12 crores 25 lakhs 99,220. Once again, cooperative society, the way of calculation is like this. Income minus 20,000 into 30% plus 3,000. That is cooperative society. Surcharge is applicable here since the income has exceeded 1 crore because of that. Then cess is common. Surcharge is 12% automatically for cooperative society, local authority, partnership firm. If it is applicable, it is 12%. Not applicable, 0. So there are no multiple things in the case of them. So 12% of income tax is the surcharge. Cess 4% common. After adding it, the final tax liability is 49 lakhs 84,360. Then for domestic company Z Limited, it's a small one with less than 400 crores turnover in 17-18 and 1 crore 88 lakhs income. Because of the small scale and less than 400 crores turnover conditions are being satisfied, applicable tax rate will be 25% here of the income, and applicable surcharge rate will be 7% since the income is more than 1 crore but less than 10 crores. So be careful. This is where people do mistakes sometimes. They take 12% looking at this. No, this is income. This is not income. This is turnover. So when surcharge is to be calculated, percentage will decide upon the income, not on turnover, but percentage will be applied on base tax. So two many numbers are there. On which number you have to calculate, you have to be careful. On this number you have to calculate, which is base tax. But what is the checking number? Is it income or turnover? Not turnover. We have to check income. Then why turnover is required? That is only for this purpose. Whether 25% or 30%, that depends on turnover. That too not the turnover of current year. Sometimes to confuse 2019-20 turnover also will be given, 18-19 also will be given, 17-18 also will be given. Like that 3 years turnover will give. We don't care about the other 2 years. We only care about the turnover in relation to 2017-18. So that is how, where the useful information is, where the not so useful information is, we have to identify. Anyway, in this case, we have 7% surcharge only. Why? Because the income is more than 1 crore but less than 10 crores. So 7% only in case of domestic companies. Cess 4% is anyway common. Hence, the total tax liability is 52 lakhs 38,780. Then last one is foreign company. Foreign company 40% as usual, flat rate. Surcharge you have to calculate carefully depending upon the income. Where is the income lying between 1 crore to 10 crores? So 2% surcharge, 4% cess on income tax plus surcharge. So the total tax liability of this foreign company will be 1 crore 36 lakhs 52,300. That is the final answers. So check these answers once again. What are the answers you got and what are the answers correctly to be done? Check them, each of them. I already forwarded the file to you, but check them stepwise if they went wrong. If they are correct, final answer is correct, don't worry about the steps and all. Straight away that is correct, because if any step goes wrong, final answer will anyway be wrong. That is why I am not asking you any steps, but I am giving you the steps so that if you get any answer wrong by mistake, where the mistake happened, you should be able to know that. So this is the answer or key, we can say, for the task 3. Hopefully most of you would have got correct answers. If not also, don't worry about it, practice more and rectify the mistakes. Doing mistakes is not a problem, not rectifying the mistakes is a problem. And I told already, some people will be more interested in crying about their mistakes rather than rectifying them. That will never help in this course. In this course, it is all about moving forward, whatever the way it may be. That type of attitude is required. So, mistakes done, that's it, okay, move on. Rectify it, move on. Try not to do that next time. Don't be sorry and all. I don't want to see sorry in this group too much. That is a word which is not so frequently to be used. So, just learn from the mistakes and move on. Okay? Good. Next, let us move on to the last topic in this topic. Last topic of the, you can say, the chapter, that is tax rates. So one of the other type of calculations which will be required MCQs wise, particularly 2 marks MCQ, not 1 mark, because margin relief is reasonably a big calculation. Not just a tax liability, it is beyond that. That is why 2 marks MCQs can be expected from this. Quite possible for appearing in the examination. So the point is how to calculate marginal relief. First of all, what is marginal relief? Why marginal relief? Now, the name indicates first of all relief. Relief means it is a good thing. Relief, rebate, these words are good words or bad words? Definitely good words. For the SSC point of view, surcharge, cess, these are bad words. Tax, these are all burden on the SSCs. So there is a tax, there is a surcharge, there is a cess. These are all burden on the SSCs. But there is rebate in particular cases, what we discussed earlier under section 87A. Now, we have marginal relief also for certain category of SSCs. So that means definitely this relief is a not burden but a benefit to SSC. That is first point. Then second point, we need to know when this is applicable. Why marginal relief should be given. Understand the concept, that is easier to understand by knowing surcharges. Now, we have this surcharges table wherein if the income exceeds a particular threshold, there is a surcharge applicable on the tax payable. Now, imagine a situation where somebody has an income which is just exceeding the threshold. If he had an income of exactly the threshold or less than the threshold, Either there would not have been any surcharge or there would have been a lower percentage of surcharge. Just because somebody's income has crossed the threshold, surcharge percentage rate has increased. And we have to understand the surcharge percentage is to be calculated on what? On the income tax liability of the SSE, which means the base tax of the SSE on which the surcharge is to be calculated. Now just for understanding purposes, let us for example take an individual who has 49 lakhs, just for example, an individual who has 49 lakhs 99,990 rupees as his income. Exactly how is it possible? We are taking example. Or let us say for that matter 50 lakhs income. We rounded it, and 50 lakhs income somebody has. And some other individual also almost got 50 lakhs income, but maybe on the last day or 31st March or sometime additional 10,000 has come to him. So that also is his income for that previous year. So what is the income of that SSE we are talking about? For one SSE it is 50 lakhs. For one SSE it is 50 lakhs. Just for example we are taking here. Right? So this is 50 lakhs for one SSE. Is it 50 lakhs or 5 crores? Yeah. So that is 50 lakhs for one SSE, and other SSE, by mistake what happened? We don't know whether it is his luck or bad luck. He got more income, ideally he should be happy, but now let us see whether he will be happy or not. I don't think he will be happy. Why? Let us see why. If a person is having an income of 50 lakhs, if this person, one person is having an income of 50 lakhs, if this is the case, then what is his final tax liability? If a person is having an income of 50 lakhs 10,000 rupees, what is his final tax liability? You can calculate, because we know already how to calculate that. Let us take first case. 50 lakhs is the income of one individual. So what will be his tax liability? What will be his tax liability? That will be whatever the income minus 10 lakhs, right? Income minus 10 lakhs into 30%, right? Plus 1,12,500. You know this calculation already. You have to do this. So on 50 lakhs, exactly if at all somebody has an income, how much will be the tax, base tax payable by that guy? Base tax only we are talking. Base tax is 13 lakhs 12,500. Is there a surcharge applicable? This is base tax. This is surcharge. This is, let us say, health and education cess. Then total tax payable. So just let us take this situation of an individual here. 50 lakhs rupees, if at all the tax, the income of individual is, how much is the base tax payable? Base tax payable is going to be 13 lakhs 12,500. Of course, it will change a little bit if at all that individual is 60 years or 80 years old. Let us not assume those old things. If at all it is given in the question that he is a senior citizen or super senior citizen, then calculation will be different. Otherwise, no. So in normal circumstances, for example purposes, even if nothing is mentioned in the questions also, we have to assume that a person is a normal resident individual with less than 60 years of age. That is a basic fundamental assumption. We should not take any exotic assumptions related to maybe he is 88 years old, maybe he is ready to die. All these assumptions we should not take. That will not be correct. So basic person, normal person. So 1,12,500 we have to add after calculating 30% on the income exceeding 10 lakhs rupees, that we know. Then is there a surcharge in this case? No. Is there a cess? Of course, yes. How much is that? That is going to be, in this case, 4% of this, and definitely The total tax payable by this guy will be 13,65,000. That's what we have been doing already in many assignments. So we know this how to calculate 13,65,000 if a person's income is exactly 50 lakhs. Now look at a situation where luckily a person got little bit more income than 50 lakhs, and let us see how his luck becomes bad luck. How? What will be base tax in case of such a person who has got 50 lakhs 10,000? Method of calculation is same. Income minus, same way. Income minus 10 lakhs into 30% plus 1,12,500. That is not going to change. Base tax is going to be same. But what is the speciality here now? Here there is a surcharge. Surcharge has come into picture. Why? Because the income of the SSC has exceeded 50 lakhs. The moment it exceeds 50 lakhs, it is only a condition. You may say that here difference is only 10,000. We don't care. When the SSC's income exceeded 50 lakhs, automatically the surcharge will be applicable at a rate of 10%. So we have 10% surcharge on base tax, because the income of the SC is between 50 lakhs to 1 crore. Depending upon the nature of SC. Here the SC is individual. Then we have cess. Cess also here we have to be calculating on what? Base tax plus surcharge. On that 4% we have to calculate. So the total tax liability is how much here? 15 lakhs 4,932. Say rounding, after rounding 930. These are calculations which we know. But look at the fate of this person. He got an additional income of only 10,000. Only 10,000 he got additional income. But because of that additional income of 10,000, he is paying an additional tax of 1,39,932 rupees. Means additionally what is the burden on this guy? That is 1,29,930 rupees he is paying for nothing. Just like that he is paying, though he did not get any benefit related to that, just because he has crossed the threshold of 50 lakhs, he is paying a higher tax. And why is this happening? Because of which magic this is happening? The magic is all with surcharge. Because of that, this additional tax liability of the SSC is arising. Because earlier he would have been subjected to either no surcharge or less surcharge. Now he is subjected to more surcharge, because of which his final tax liability is increasing. This is only for example what is the unfairness in the provisions of surcharge. Now, should we leave it like that? Let him go to hell, let him pay, why should we care? Like that we can also think. But definitely when the lawmakers are considering certain things, particularly when there are limits and there is a narrow crossing of the limit. If that limit is crossed by too much, then anyway there is no relief and all. But here what is happening? The threshold of 50 lakhs is crossed narrowly. That is why we are calling it marginally it has crossed. A little bit it has crossed. Marginally, by a very small portion, that 50 lakhs threshold has been crossed by the SSC. If so, because of this surcharge, he is paying additional tax, and definitely that is not fair. So how to give some kind of relief to him in these circumstances is what is called marginal relief. So marginal relief is nothing but it is a reduction in the tax payable by the SSC, that is relief naturally, and applicable to which type of SSCs? Not all SSCs, only those SSCs where surcharge is applicable. If there is no surcharge, no marginal relief, no need of marginal relief. Surcharge is applicable, then only marginal relief is there. If the income of the SSC exceeds the threshold marginally. What is marginally? How much is marginally? That is none of our business. For each limit, we can derive a number by crossing which marginal relief will not be applicable, by not crossing which marginal relief will be applicable. But we don't need that. That all unnecessary memory we can avoid. But what we should just understand is the concept of marginal relief. What is the concept? Because the income of the SSC has exceeded the threshold marginally, by a narrow margin, this relief is going to be given to the SSE. So when this will be applicable, where the net income exceeds any of the thresholds. For individuals, it could be 50 lakhs also. For individuals, for everybody actually. This 1 crore is a threshold that is applicable for all SSEs, we can say. For individuals also 1 crore is there. For firms, LLPs, cooperative societies, local authorities, domestic company, foreign company, for all of them 1 crore threshold is common. So that is the most common of all cases when it comes to marginal relief calculation, because surcharge also is calculated once the income of the SSE exceeds 1 crore. So 50 lakhs is only applicable for individuals, 1 crore is applicable for all types of SSEs, 2 crores, 5 crores also is applicable only for individuals, because there is no such thresholds for other types of SSEs. Only for individuals, the surcharges are changing when the income is below 50 lakhs, nothing, 50 lakhs to 1 crore, 10%, 1 crore to 2 crores, 15%, 2 crores to 5 crores, then we have 50 lakhs to 1 crore is 10%, and 1 crore to 2 crores is 15%, 2 crores to 5 crores is 25%, and 5 crores above is 37%. That is for individuals. For individuals, the 10 crores thing is not available, not required. Only up to 5 crores, this threshold is there. If the income of the individual crosses 5 crores by any chance, automatically that 37% of income tax will be applicable as marginal relief, surcharge. So the point is, when the income of any SSE exceeds these threshold limits exactly, then marginal relief will be applicable. So for 50 lakhs, only individuals, 1 crore, all SSEs, 2 crores, 3, 5 crores also only individuals, 10 crores also is not applicable for individuals, not applicable for firm also, not applicable for LLP or local authority or cooperative society also. But 10 crores limit, if you observe in the surcharge table, it is only applicable where? It is applicable for domestic and foreign companies. Only for them such case will be applicable. So as the case may be, if the net income exceeds these thresholds, then marginal relief can be given if income of the SSE exceeds these thresholds marginally. Then how to calculate marginal relief? This is the formula. Directly you can remember also, because all of them are having same logic. Only thing what changes is the amounts of thresholds. Look at the first one. Let us take one by one. First one, what it is talking about? Income tax plus surcharge on actual income. That has to be calculated first. Income tax plus surcharge on actual income, because this is first of all applicable only when surcharge is there. If surcharge is not there, we don't need to even calculate marginal relief. So definitely there is surcharge. Income tax plus surcharge on whatever the actual income is, if it is exceeding 50 lakhs rupees for the first case, minus of income tax on 50 lakhs. Here if you observe, there is no surcharge on 50 lakhs, only income tax on 50 lakhs. That has to be calculated first, that is all one shot, minus of something else, second thing, that is actual income minus 50 lakhs. In other words, by how much the actual income has exceeded the threshold. By how much the actual income has exceeded the threshold. So that is what is the second part, that is actual income minus 50 lakhs. First part is income tax plus surcharge on actual income minus income tax on threshold. Whatever that is, threshold only will be there in each formula. Now if we go to the second case, this is applicable as we said for everybody, individual, partnership, firm, LLP, every SSE 1 crore to anyway is there. There, income tax plus surcharge on actual income is common. That is basically what we already calculated in all these days, whatever we are doing, calculating base tax plus surcharge, that we are taking. Minus of, that is first thing, minus of what? Income tax plus surcharge, if any, on 1 crore. Will there be any surcharge on 1 crore in case of firm, LLP, cooperative society, or local authority, or domestic company, or foreign company? No. That means what? If any, where it is if any on 1 crore applicable, only for individual there is a surcharge on 1 crore also. Income, if it is 1 crore also, it is applicable because income exceeded 50 lakhs. 10% surcharge is there. So income tax plus surcharge will be applicable for individual. But if the income has exceeded 1 crore for individual, the applicable surcharge actually will be 15%. So when we take income tax plus surcharge here, income tax plus surcharge on actual income when we take, this will be 15% since the income has exceeded 1 crore. This is what? Income tax plus surcharge on 1 crore. So what we are calculating here, if at all the SSC has not crossed the threshold, how much would have been the income tax plus surcharge? Would have been, not really. So the first one is real, that is income tax plus surcharge on actual income. Then the second one, minus of what we are calculating, is not real, that is the imaginary thing. What if the SSC did not cross 1 crore? How much would have been the income tax? Of course, there would have been surcharge also if he is an individual. If he is not an individual, only income tax on 1 crore will be calculated. That is deducted from income tax plus surcharge on actual income. That is kept aside. That cannot exceed actual income minus threshold, means by how much amount the actual income is exceeding the threshold, that is the second one. If you deduct the second one from the first one, what we get is marginal relief. This is how, in any case, the same logic applies. If you look at the third one also same, income tax plus surcharge on actual income, same, minus income tax plus surcharge on 2 crores, because the threshold here is 2 crores, minus of actual income minus 2 crores. So when this is applicable, when the income exceeds marginally 2 crores. So this one, first case, applicable when the income exceeds marginally 50 lakhs. The second case is applicable when the income is exceeding marginally little bit, exceeding 1 crore. This is applicable for everybody. 2 crores is not applicable for everybody, only for individuals. If the income marginally exceeds 2 crores, then it is applicable for individuals. In that case, marginal relief has to be calculated like this. Income tax plus surcharge on actual income minus of income tax plus surcharge on 2 crores. That is one thing. Total on that minus of actual income minus 2 crores. The same logic with 5 crores also. What is the formula here once again? Income tax plus surcharge on actual income minus of income tax plus surcharge on 5 crores here minus of actual income minus 5 crores. So here also this is applicable for individuals only, 5 crores thing. Then the next one is applicable only for companies, domestic and foreign companies. So this is the one which is applicable for most of the SSCs, almost all the SSCs. This 1 crore formula will be applicable. This 50 lakhs, I'm just making it red. This 50 lakhs, this 2 crores, and the 5 crores thing is only applicable for whom? That is only for individuals. 1 crore is also applicable for individuals. So this is for everybody, universal. But 10 crores is only applicable also for companies, which are either domestic companies or foreign companies. So whatever the case may be. So for them also the 10 crores is the threshold. So that is about marginal relief calculation. Once you have marginal relief, not this is once it is a relief, what should be done? That relief should be reduced from original income tax plus surcharge on actual income, what we are calculated normally. So normally what we calculate? Income tax, base tax, that is, plus surcharge. These two things we calculate. Here after doing this, we have to give a reduction in the form of marginal relief. Plus 4% cess. So the point again to note is where the marginal relief will be introduced, if at all. If at all, there is to be another column here, though in all these cases marginal relief was not applicable, so there is no problem, don't worry about the cases you have done. Those are cases intentionally given without marginal relief. But if at all marginal relief is applicable, where it would be? It would be after base tax plus surcharge is added, but before cess is added. Here marginal relief should be given, which should be given as a deduction. It should reduce from this base tax plus surcharge minus margin relief plus cess. That is how the final calculation will happen. Rounding and all other things are all same. Income should be rounded according to 288A. Tax liability should be rounded according to 288B. And also note that no relief is there on the cess. So don't add cess and then calculate relief. No. Again I am repeating. no relief on the cess, which means what? Never calculate marginal relief after adding the cess, and never do any rounding in the intermittent steps. Rounding is required only at the beginning and the end. Other than that, no rounding required. Same way, cess also should be done as a penultimate step. If there is a margin relief before that, first we should compute margin relief, reduce it from the base tax plus surcharge, then add cess as a last but one step. Then as a last step, do the rounding under 288B. So that is what is the steps for computation of marginal relief. Now for easy understanding purposes, this can be a simple way of calculating margin relief. This you can follow in solving the questions in relation to margin relief also. Irrespective of the SSC, the procedure is same. But for SSC, what will change? Base tax calculation will change, surcharge percentages will change. That will change. But the way we calculate margin relief will not change. Understand this carefully. This is what is going to be useful for your problem solving on margin relief particularly. So what is step 1 which we do? That is computing the base tax plus surcharge on whatever the income that is given in the question. So base tax plus surcharge on actual income we have to calculate. Then step 2 is imaginary, but still we have to do it. Though it is not an actual income, we have to calculate just base tax on the threshold. If surcharge is not applicable up to threshold, for example for an individual up to 50 lakhs, there is no surcharge. For all other SSCs up to 1 crore, there is no surcharge. So we have to calculate income. What if the SSC did not cross the threshold, there would not have been surcharge, or even if there was a surcharge, that would have been at a lower level. Take another example. Say for example a company is having income of just crossing 10 crores. Say 10 crores 40,000 it has got income. So what if it did not cross 10 crores? For a domestic company, surcharge will have been 7% only. But just because it has crossed the 10 crores threshold, now the surcharge became 12%. So that is getting punished because of just marginally exceeding the threshold. So margin relief will be available. But how to calculate second step there? You have to calculate base tax plus surcharge on the threshold. What was the threshold in that example? 10 crores. Is there a surcharge applicable till that 10 crores? Yes, because already income has exceeded 1 crore. So apply 7% surcharge there in the second step, whereas in the first step, since really the actual income exceeded 10 crores, we have to apply 12% surcharge. So this is 12% reality, 7% imagination. What if the income was not more than 10 crores but exactly 10 crores? Will the income be exactly 10 crores? Then there is no need of calculating any of these things. But only what if. So step 2 is an imaginary thing, but very important step to calculate. What if the income did not exceed the threshold at all? Then how much would have been the tax liability? And what is tax liability here? Base tax plus surcharge, if any. In the first step we don't say if any. In the second step, if any will come, because sometimes there may not be surcharge also up to threshold. Actual, definitely there will be surcharge when we are talking about word marginal relief. If without surcharge, there is no need of margin relief at all. So first step, calculation of base tax plus surcharge. Second step, calculation of base tax plus surcharge, if any, on the threshold. What is the threshold? That is the threshold we are talking about here. It could be 50 lakhs, it could be 1 crore, it could be 2 crores, it could be 5 crores, it could be 10 crores, as the case may be. Different SSCs, different thresholds. So that is the threshold on which we have to calculate base tax plus surcharge, if any. Then what we have to do is step 1 minus step 2. Keep it aside. Don't worry about it. Step 1 minus step 2. Keep it aside. That is step 3. Then step 4 is another thing. Actual income minus threshold. That's what we are talking. Actual income minus threshold. Again, what is threshold? We are generalizing that. Instead of having 100 formula, we are just having a general formula. What is threshold? It could be 50 lakhs, it could be 1 crore, 2 crores, 5 crores, 10 crores, as the case may be. That will be actual income minus threshold. That is step 4. Then what is margin relief? Simply step 3 minus step 4. That's what is mentioned in the formula also. We are just doing stepwise. Here it is directly done as a formula. Here we are doing stepwise. Whichever is convenient to you, you can do that. More practice you do, quickly you can do the computation of marginal relief, nothing but step 3 minus step 4. Once you have marginal relief, what will be the tax payable? Step 1, which is reality, which is original tax payable, minus relief that is given under step 5. So step 1 minus step 5 gives us the tax payable plus 4% cess to be added. After that, of course, we have to round it if required under 288B. 4% as cess is automatic, always to be added. Rounding will be done only if required. These two steps we know. 7 and 8 are not new to us. 6 is also not something special. Only thing is 5. That is where marginal relief is calculated, which is nothing but step 3 minus step 4. Then what is step 3? Step 1 minus step 2. Then what is step 1? What we calculate normally. Only additional calculation here is step 2. What would have been the income tax plus surcharge, if any, on the threshold. If we calculate that, 1 minus 2 gives us step 3. Actual income minus threshold means what does it represent? By how much the actual income has exceeded the threshold limit. That is step 4. Then 3 minus 4 is marginal relief. Now let us take this as an example. We have this say same example. Let us take what we have taken earlier. Say in this case, what we have, this 50 lakhs rupees is one guy and 50 lakhs 10,000 rupees is another guy. So now we don't have two SSCs, one SSC only. He has an income of 50 lakhs 10,000 rupees. So step 1 is what we already calculated. Compute the base tax plus surcharge on actual income. What is actual income here? Actual income is 50 lakhs 10,000. Let us take it as actual income. If this is the actual income, step 1, how much is that? Already we calculated. How much it should be taken? How much will be taken? This is base tax plus surcharge should be taken. So 14 lakhs 47,050 on 50 lakhs 10,000, base tax plus surcharge of 10%. Put together 14 lakhs 47,050. So that can be taken here, or you can just take the total of these two things, this plus this, base tax plus surcharge. So that's what is the first step. Now base tax plus surcharge on actual income. You know how to calculate this, so you can calculate it on paper. How much is that? 14 lakhs 47,050. Now compute the base tax or base tax plus surcharge on the threshold. What is the threshold here? 50 lakhs. Means what? What if the income was only 50 lakhs? Then how much would have been the tax plus surcharge? Will there be surcharge in that case? No. There would have been only base tax, that is 13 lakhs 12,500. And then we have step 3, which is nothing but step 1 minus step 2. That is step 3. Keep it aside. Just like that. That number has no relevance. Just keep it aside. Then we have step 4. That is actual income minus threshold. Actual income is 50 lakhs 10,000. How much is the threshold we are talking? 50 lakhs. So means by how much the actual income has exceeded the threshold. That is by 10,000 only. That is step 4. Then what is margin relief? Step 3. What we have calculated minus step 4. This is margin relief. That is 1,24,550. Then what is the tax payable? Original tax payable. Step 1 minus step 5. So 13 lakhs 22,500 is the tax payable before cess into 4%. Yeah, that is cess. Then final tax payable is how much? 13 lakhs 75,400. If you see that, 13 lakhs 75,400 is the tax payable. It is already rounded, so nothing to round it. But earlier what we calculated, how much is this? Of course, only the total tax as we calculated, including the cess. For this guy, 15 lakhs 4,932. Just for understanding purposes, if you take this number and see the difference here, you can understand the benefit that is given by margin relief. How much is that? 1,29,532 rupees benefit is there. Now understand, the benefit is also there because of lesser tax liability, and because of that automatically cess also got reduced. So if without marginal relief, final tax, the SSE would have paid higher by 1,29,530 rupees. That is only for understanding purposes. So that is what we are talked about. 1,29,932 rupees is the additional tax that he would have paid by taking normal calculation. But if marginal relief is given, he will end up paying only how much? 13,75,400 rupees. That is the benefit he is getting by way of margin relief. How much margin relief here? 124,550. That is margin relief. But the benefit he is getting is not that much. Benefit he is getting is 1,29,932 because of cess also being saved. Cess does not have a relief, but that also gets saved. When your tax liability before cess is reduced, naturally cess also gets reduced to that extent. So that is margin relief concept, when the income of the SSE exceeds the threshold by marginal amount. Marginally if it exceeds like that. Clear? Any type of case we can solve, and as you have seen here, all cases are possible to be asked as margin relief cases. So 1, 2, 3, 4, 5, 6, 7, 8, 9 cases are possible here easily in relation to margin relief. All 9 cases we are not going to do, but any other special case also we can try to do separately. Say other type of SSEs, let us try. For individuals it will take more time also, naturally, because you have to calculate the incomes carefully. So let us say for an individual the income is 1 crore 1,10,000. 1 crore 1,10,000. For an individual, if that income is 1 crore 1,10,000, this surcharge though definitely will be applicable. So what is going to be the base tax plus surcharge? Calculate that carefully on your calculators. So we can take this first base tax minus I am doing it in one shot, but you do it on calculator separately. How much will be the tax payable on 1 crore 1,10,000? Base tax will be income minus 10 lakhs into 30% plus 1,12,500. Then surcharge will be applicable in that case. How much will be the surcharge in this case? Because income has exceeded 1 crore, surcharge will not be 10%. Instead, it will be 15%. So how much will be the base tax plus surcharge? That is going to be 32,72,325. Don't round it and all, only just calculate normally. That is going to be the base tax plus surcharge on actual income, that is 1 crore 1,10,000. Now what would have been the base tax plus surcharge on the threshold? What is the threshold in this case? In this case the threshold is how much? That is 1 crore only. So let us take this 1 crore calculation. So 1 crore minus 10 lakhs into 30% plus 1,12,500. But how much would have been the surcharge applicable if the income is only 1 crore? Since it has exceeded 50 lakhs but did not exceed 1 crore, exactly 1 crore does not mean exceeded 1 crore. 10% surcharge is only applicable, means the income tax plus surcharge on the threshold plus surcharge would have been only 30,93,750, and then deduct step 2 from step 1, that you will get 178,575. Then actual income minus threshold. So what is the threshold here? Threshold here is how much? That is 1 crore. So actual income minus threshold means by how much the actual income exceeded the threshold is 1,10,000. That much actual income has exceeded the threshold. Then you have step 3 minus step 4. That is the margin relief. In this case, the marginal relief is only 68,575. That is step 3 minus step 4. Then you have step 6, that is step 1 minus 5, step 5. So step 1 is basic tax calculation, what you have been doing already, minus marginal relief. This gives us the tax payable, of course, after adding the 4% cess and rounding it, we will get how much? 33,31,900. That is going to be the final tax liability of the SSC if marginal relief is available. Imagine if marginal relief was not available, directly how to calculate here, adding 4%, right? So it would have been 34,03,218. So now just for understanding how much saving the SC has made in the tax amount totally including cess, 71,318 rupees almost. There is a benefit to the SSC. Of course, that is more than the margin relief definitely because of cess being also saved due to the reduction in tax liability before cess. However, that does not mean cess has margin relief. No. Cess will be reduced little bit because of margin relief. But cess does not have margin relief, which means before calculating marginal relief, you should not add the cess. Cess should be added only as a last but one step. Then only cess should be added. After that, already we have tax liability directly. That is the final tax liability. In case of SSC having an income of 1 crore 1,10,000, it would have been higher if margin relief concept was not there. Since there is margin relief available to the SSC, he is paying a little lower tax than what he is supposed to pay. That is the concept of marginal relief for any type of SSCs, any type of incomes, wherever surcharge is applicable, this can be applied. Calculations will be done like this using the steps. And one more last item we will take for as an example. Let us take say a domestic company. Yeah. Let us take a domestic company. Domestic company, let us say with an income of, I am taking a complicated one directly so that you can understand the second step, because second step is only calculating base tax on threshold or base tax plus surcharge on threshold. So we are taking base tax plus surcharge on threshold. So let us take this as a different one. So this is 1 crore, right? Now let us take 10 crores. So 10 crores, say 2,22,000. So 10 crores, is it 10 crores? Yeah, this is 10 crores. So 10 crores, 2,22,000 is the income of a domestic company, let us say. And let us assume this is less than 400 crores turnover in 17-18. So normally what is the tax rate applicable? It is very simple. That is going to be straight away 25%. That is okay. But since the income has exceeded 10 crores, what will be the surcharge in this case? It will be 12%. So directly I am calculating income tax plus surcharge on this amount. That is going to be 2 crores 80,62,160. Applying a surcharge of 12%. Why? Because income of the company has exceeded 10 crores. And what is the original income of the company actually? 10 crores 2,22,000. Marginally it has exceeded 10 crores. Now, we have to calculate base tax plus surcharge on the threshold. What is the threshold here? Not 1 crore. Here threshold is 10 crores. So how much would have been the base tax plus surcharge on the threshold? So exactly if income is 10 crores, then how much would have been the tax liability of the company? Let us see that. So if it is 10 crores exactly the income, how much would have been the surcharge? That is the point here. It would not have been 12%, it would have been only 7% since it is a domestic company. So if the income of the company was exactly 10 crores, the base tax plus surcharge would have been only 26 lakhs 7 lakh 50,000. Just because the income has crossed 10 crores marginally, there is a additional tax liability in the form of higher surcharge of 12% instead of 7%. Now let us see how much it is exceeding this. It is exceeding by good amount. Almost 13 lakhs rupees it is exceeding by. Huge amount. So here we have 2 crores 80 lakhs 62,160, but now if at all the income was only 10 crores, they would have paid only 2 crores 67 lakhs 50,000. So there is a difference of 13 lakhs 12,160. Then income here has exceeded 10 crores threshold only by 2 lakhs 22,000, isn't it? Only by 2 lakhs 22,000. Then what is the margin relief? This minus this, which is step 3 minus step 4, that is margin relief. Then tax payable, there is a 10 lakhs margin relief in this case if you observe. Tax payable will be how much? From the step 1 which we originally calculated minus marginal relief. So minus marginal relief, after that add 4% to that. Then you will get the final tax liability of how much? 2 crores 80 lakhs 50,880. So if at all there was no marginal relief, just for understanding purposes, how much tax the SSC would have paid? Total 2 crores 91 lakhs he would have paid. Now look at the saving that SSC has got. Almost 11 lakhs 33,766 savings he has got. Of course we can check that also, because that is the marginal relief that we have, which is going to be nothing but this. Same, no? Because on margin relief 4% if you calculate, that also is saving. So the total saving is 11 lakh 33,766 if you take money as a basis, but margin relief is only how much? 10 lakhs 90,160, because of which there is a lesser tax that the SSC will pay. If at all there is no margin relief, how much he would have paid? He would have paid more. He would have paid higher amount, what we have already calculated here. That would have paid 29 lakhs. But now he pays only 28 lakhs final tax. So that is how marginal relief has to be calculated. Once again, these steps you have to remember well, and concept you have to remember well. This is the concept of marginal relief, why it is given. When the income of the SSC exceeds the threshold marginally by a smaller amount, then the additional tax payable by the SSC should not exceed the amount by which the actual income exceeds the threshold. That is a provision. You don't need to by heart all that. Just understand that. That is enough. Point is, basically how much additional tax the SSC is paying, you have to calculate. How to do that? That is step 1 minus step 2. How to get step 1? What is the additional tax the SSC is paying? For that we need to first calculate base tax plus surcharge on actual income, and then we have to calculate what would have been the tax plus applicable surcharge, if any, on the threshold. So this is the additional tax. Step 3 is nothing but the additional tax that SSC is supposed to be paying only because he has exceeded the threshold marginally. That is the additional tax. This amount, as per law, should not exceed the difference between actual income and threshold. Actual income and threshold is this, and if this exceeds this, then there is a margin relief of whatever the difference between step 3 and step 4. Some cases may be there where, for example, let us say an SSC is having an income of say 60 lakhs. If an SSC is having an income of, I am just taking other things out so that you can understand clearly. Let us say 60 lakhs is there. Can we say the SSC has exceeded the threshold marginally? We don't know. If we don't know, you can check that. But by experience you can come to know it cannot be that much. 10 lakhs out of 50 lakhs means almost 20% more, not marginally. So up to 3 lakhs, 2 lakhs, maybe it's okay, but not beyond that. But it has exceeded by more than 10 lakhs, let us say. In that case, 60 lakhs, 10,000, if at all the SSC's income is, then how much would have been the tax liability of the SSC here? Just calculate once again. income minus 10 lakhs into 30%, right? Plus 1,12,500. So this would have been the tax liability including surcharge if the income of the SC is 60 lakhs, 10,000. Whatever income minus 10 lakhs into 30% plus 1,12,500. But what would be the threshold here? Threshold will be same. What if the income is only 50 lakhs? How much would have been the tax liability? That also you can calculate. It would have been 13 lakhs 12,500. Step 1 minus step 2 is 3 lakhs 3,000. Actual income is exceeding the threshold by how much? 10 lakhs 10,000. Margin relief is 7 lakhs 7,000 negative. Point is this possible? Can we say there is margin relief? Absolutely not possible. Don't do this. In case the margin relief is coming negative means what? It is not there. Nothing there. Automatically whatever the original tax payable is, that only will become the actual tax payable also. There is nothing that margin relief wise available. 4% cess is common. So the final tax liability is 16,80,120. No margin relief. How do you know there is no margin relief? Rather than by having the thresholds and how much availability of margin relief is there, directly we can say you apply the steps, no problem on the calculator itself. If it comes negative, margin relief comes negative, means there is no marginal relief. Relief cannot be negative. Just impossible. That is ridiculous. Relief is given when because you are paying excessive tax more than what you are supposed to pay. If you are not paying excessive tax, there is no need of relief. So margin relief will not come if it is negative by any chance. So that is one more example that we can take if at all such situations occur. So these are the examples of margin relief, and practice these things once again for your reference. Then I will send some more examples to you for your practice and exercise as a task number 4 that will follow after the class. So now understand this computational methodology of margin relief first, then practice these 3 examples, why and how it has come, practice them. After that you can practice some more questions in relation to margin relief later. With this we can conclude the rates of tax topic, rates of tax in relation to different types of SSEs, including surcharge related provisions, rebate if any, cess of course in all cases, margin relief if any. All these things have to be perfectly remembered. Main point is, if you are referring to the rates while calculating the questions, then that is wrong. You should remember all these rates in examination. Unfortunately, ICAI is not giving us any open book examinations. So examination is not an open book examination, which means all these things in income tax we have to remember them. So that is why I keep on telling, a lot of memory is required. So remember these provisions, remember the rates and everything. Then also the application methodology you have to remember well. That is the requirement as far as the rates of tax is concerned. With this we can conclude this topic, and in the next sessions onwards we will move on to next topic, residential status. But before that we should solidify all our knowledge and experience in relation to this topic. Everybody should be 100% thorough and perfect, and we should gain expertise in calculating the tax liability of any type of SSE any time in future. So that is the first thing to be achieved before we move to the next topic, and we will do that by doing more and more practice questions which will be sent to you in due course. Till then I will take leave, and bye bye. Thank you very much.